swear these. Some points up here.
Okay, for those of you who don't know me, I'm Brad Albrecht. I am the chair of the Finance Committee, and I'm going to kind of give you a quick rundown of the summary of where we ended up last fiscal year, kind of a follow-up to Tony Morris's State of the Parish that he did about 6 months ago. Okay, these are the people on the Finance Council. And I'll give you my sales speech on this, is that we are going to be short 2 members in June, and so if anybody is interested in May, they will have the nominations, so please sign up. We're always looking for new eyes and new thoughts to address our issues here. As Tony brought up, the church and the school for the last 2 years have worked at a deficit, both of them together. Okay, it had been probably 5 or 6 years since that had happened. We had had some pretty good times. The final results were of our fiscal year, and our year goes from July 1st to June 30th. Our church deficit was right around $27,000, and we had projected it to be about $28,000, so we were right where we thought we would be. The school deficit ended up about $40,000. We projected it to be even, and at first glance you're like, whoa, there's a big miss there. Well, when we go through our budgeting, we don't always have the diocese mandates on what we have to give to the teachers for step-ups and for salaries, okay? So we went into that. So part of that is that. Okay? The other part is an accounting timing issue. We've had for years a couple bills that have kind of rolled into the next fiscal year. And so in order to get rid of that and to be able to budget in the future better, we pulled those all into this year. Okay, so it really didn't affect our cash flow. It just affected the bottom line of this year, so we don't have to deal with it anymore after that. So we knew we were going to miss on budget on that year. The collections for 2010 were flat compared to the previous year, okay, which is pretty good considering the economy that we're coming out of, okay, or still in, depends on who you talk to. And from fiscal year 08 to fiscal year 09, our collections went down about 3%. So really over the 2 years of this recession, we've lost about 3% collections, which is really not too bad. I know there's a lot of parishes that wish they could say that. But that all affects our cash flow, okay? And cash is king in this non-for-profit, okay? What comes in goes out the door, okay? Our cash balance, which we have been watching very closely and always do, was down about $15,000 from last year, okay? From this time last year. If you go back 3 years before the recession, it's down about $23,000, okay? Still not too bad. We do remain debt-free, which is really key for any kind of future that we want to build. It helps not to have that debt load, okay? The collections for 2011, which is just 3 months through the end of September, are basically up, and I say slightly, maybe 1%, okay? But they are even with our fiscal year budget. We didn't budget any kind of increase really for our collections. Speaking of the budget, this is where we're projecting this year. $20,000, a little bit over $20,000 deficit for the parish. The school's going to run a surplus of right around $16,000, okay? And that's pretty well break even, okay? You have a couple good collections, or you have a good picnic, or you have a good gala, and we're right there. We're maybe even into surplus, which is something that's good. It's the first year in 3 years we've been able to break even on our budget. And we are currently in pace in both areas there. Some of the statistics. And this is kind of sobering when we go through this, okay? The parish has 1,299 families. We have active weekly givers that range between 400 and 550 families. That is roughly a third, 33% to 44% of our registered families are active contributors to the church, okay? When we went out to, we talked to some banks regarding the project financing. When we give those statistics, I don't know if this is good or bad, but they say, yeah, that's about right, that's about average. And again, I don't know if that's good or bad. I mean, yeah, it's average, but it's also, there's a lot of people out there that are registered that are not active in the contribution side of things. And what that does is that makes our fundraising so much more important, because we got to do our fundraising has to be used to meet our budgets, okay? And that's positive. It's positive when we go out and we can go out and get that the fundraisers going, the picnics, the worst marks, the galas. We can get the money for that, and we can have a good year. That's great, because it brings money in a lot of cases from outside those active givers, and that's what we're looking for with that. But the negative of that is it's risky. You know, this year's picnic was a perfect example. We had bad weather Friday night, a little bit of bad weather Saturday, and picnic revenues were down $15,000 from where they were the year before. Well, if you remember, I said our cash balance was $15,000 less from this time last year to now. It's a direct correlation. I mean, you cannot, that's exactly what it is, and that's why the risk is there of relying on our fundraisers to do that. Really what we need to do is have our collections cover our day-to-day expenses, and then our fundraisers can be used for the rainy day accounts, the carpeting, you know, the boiler, that type of stuff. That's what our goal is. Again, we're not in it to make the money, but we are in it to keep everything that we have moving, okay? Our goal is to be break even with our parish operations, our day-to-day operations. Our challenges. I gave this little spiel about 20 months ago, I guess. And our challenges are the same now as they were 20 months ago. Is to continue this trend of collections to keep our current pastoral services. Everything that we have going on right now, we need to have our collections to be able to do that. You know, we very closely watch our expenses, especially over the last 24 months we have, and we watch our revenue. Again, we're not in it to make the money, we're in it to continue our services. The other challenge that we had was replacing the income from the endowment. Before the recession hit, our endowment balance was about $1.3 million. When the recession hit, our endowment balance went down to $900,000, okay? What that did is that took $70,000 that endowment gave to the school every year and took it to zero. Okay, so now, along with everything else, the school's trying to figure out how we're going to deal with that $70,000 offset, okay? Well, the finance committee, the investment committee worked very hard and came up with a plan that they're going to put half of the endowment funds into bonds, so that the interest from those bonds will be used to offset some of that $70,000. And on an annual basis, right now, we figure it'll be about $20,000 that the school will get from that move. Okay. Hopefully, as the market moves up, that number will become higher. Okay. The other thing that we're going to do with that is, with the help of the diocese, there is a plan to go out and just let everybody know about the endowment fund. Excuse me. And how it works, and get the information out there, so maybe people will start putting it into their wills. We'll start contributing to it, and maybe being able to match it with your company's match funds and stuff like that, so that we can grow the endowment, which then again will help us to be able to invest more, which will help us to be able to get more money to the school on an annual basis. That kind of brings us to the whole reason we're here is the project. Okay? And I'm just going to hit on this real quick because Mike is going to do the details with it. But we have to run a capital campaign for this project. The parish is going to continue to work at breaking even on the operations, but it's not going to be able to pay anything for the project itself. The project is going to have to support itself, which means we're going to have to work off of a budget, could be very tight, and the capital campaign is going to be the key to that budget, okay? So whatever we can raise there, that makes the difference in what we can do with the project, okay? And with that, I'm going to hand it over to Mike, and he's going to go over the details.